Hi everybody, Ken Heinz here, HFR President with the HFRI 400 March 2023 Performance Snapshot. March was an exciting month, volatile month, and a mixed month for hedge fund performance where we did see leadership from, interestingly, equity hedge in what was a very volatile month for equities overall. Even though the fact that U.S. equities ended up with a narrow gain, we did see significant dislocations and significant new trends develop. What's most interesting is that these trends are not only specific to March performance, but ones that are likely to be with us for some period of time. The first and most significant trend is a surge in bank financial risk. We saw this not only associated with the closure of Silicon Valley Bank, but also the acquisition of Credit Suisse by UBS in the middle part of the month. This gets to the second trend, which is a new precedent for government regulator involvement in stressed acquisition, which certainly was the case with regard to the Credit Suisse UBS transaction. Thirdly, we had a repricing of risk associated with AT1 bonds, and this impacts not only future issuance of these type of bonds, but also the current holdings and people that hold those bonds now. And then fourthly, the volatility in the month of March had a significant impact on the future path and trajectory of rates. I think a lot of people came into the month expecting continued increases by the Federal Reserve, and coming out of the month, it now looks like we're either at or very near the end of an interest rate increasing cycle. So significant impacts for broader financial markets and overall hedge fund performance in the month of March. As I mentioned earlier, the leading area of hedge fund performance was actually equity hedge. The HFRI 400 US equity hedge index here posted a narrow gain of about 20 basis points. We also saw fixed income based relative value strategies post a very narrow decline in what was obviously a volatile month for equities and fixed income. About 1/3% decline there, about a 1.6% decline for the overall composite, really, that's including all strategies. And the two strategy areas with the weakest performance in the month of March, event driven, which has had a strong year so far, a strong first quarter, but a lot of the risk associated with the repricing of the AT1 bonds was in the event driven strategies. And lastly, the HFRI 400 macro index, which, as you know, is a strong area of performance really for the last year and a half. But I think the biggest impact on macro in the month of March was the flight to quality that ensued associated with this surge in financial risk. And some of the CTAs and the trend following quantitative strategies in macro had made gains short that area, and that contributed to declines in the month of March. Going one level deeper here and looking at the leading sub-strategy areas of performance in the month of March, you can see that they're really dominated by equity hedge and relative value. Equity hedge fundamental growth index gained about 1.25%, about 1.25% for the relative value volatility index. As you know, these are funds that trade volatility as an asset class. Gain of about 0.75% in the HFRI 400 technology index, and the HFRI 400 fixed income sovereign index gained about 0.25% and about 20 basis points in the HFRI 400 US long-short index. Taking a slightly longer view of time at the strategy level and looking at the leading areas of performance year to date, which is really the first quarter of the year, you can see that equity hedge has led gains with a gain of about 3.14% thus far for the first quarter. This is well ahead of the performance of the narrow gain for U.S. equities. Here we have the Dow at about 38 basis point gain. You see about 1.2% gain for fixed income based relative value strategies thus far for the year in the first quarter of 2023. About 0.75% in event driven. Really, that's inclusive of the sharp decline that those saw in the month of March. So clearly in January and February, with the uptick in M&A activity, we have seen strong performance for the quarter in these strategies. Overall composite, about 43 basis points, again, narrowly outperforming U.S. equities. And then Lastly, you had a decline of nearly 4% for the HFRI 400 macro index, was that, as I mentioned earlier, was really the leading area of performance for the last year and a half, where a lot of the trend following strategies were short the front end of the curve, the fixed income curve, as interest rates increased. And then when we saw the flight to quality, a lot of those strategies experienced some partial reversal of those gains to the tune of a decline of about 3.93% thus far for the first quarter and for the year 2023. Finally, going one level deeper to the sub-strategy areas of performance and considering the first quarter recap of the leading areas of performance, you can see here event-driven multi-strategy, 6.1%, the leading areas of sub-strategy performance. Again, that well ahead of the narrowed gain for U.S. equities. And this is exciting because we've seen a strong uptick in M&A activity. We saw the ED multi-strategy pretty well insulated from the weakness in the AT1 bond. So again, leading area performance there, 6.1%. 5.125% for the HFRI 400 activist index. So you can see that event-driven strategies are really the leading areas of sub-strategy performance in the first quarter. Equity hedge also had a strong quarter. The next three leading sub-strategies are all equity hedge strategies. You can see quantitative directional, 4.7%, 4.6% in fundamental growth, and then fundamental value, just under 4% gain thus far for the year 2023. So strong areas of performance across event-driven and equity hedge thus far for 2023. There's a lot of great information on our website about the Investable HFRI 400 US indices. If you're watching this video, you know we do regular performance updates on YouTube. So please continue to watch. Please subscribe to the channel. And please, if you have any questions or other areas that would be helpful and interesting for us to focus more on in future calls, please feel free to send those questions to us. You can send a call. You can set up a call with me directly, or you can email indices@hfr.com, or you can reach out to whatever representative you work with if you have questions about the HFRI 400. Again, you know the website, www.hfr.com. Please visit that. When you do, please check out the investor guidebook. There's a lot of great information there on the Investable HFRI 400 and how it really constitutes a solution to common benchmarking challenges that institutions face here in 2023. Please feel free to check that out, and we look forward to speaking with you again next month. Thanks.